It's a movie. Yeah, yeah. Pas qu'on peut parler. Y'a fait bif, y'a joué, y'a coupé. Tandis que musique là sont distraction liée, vous comprenez? So, c'est relax, on va relax to tracks now. Yeah.
Hi, everybody. So my name is Ebony. I'm with Exit Realty All-Stars. I have with me John Lidman and Darwin Caffrey from Residential Mortgage Services. We're here just to share some information and mostly couple of tips here and there about what's going on with the mortgage. So if you guys can tell them a little bit about yourselves, introduce yourself.
Hi, so my name is John Libman over at Residential Mortgage Services. I keep a license in Mass, New Hampshire, and Rhode Island, and my license number is 14174. Darwin, I'll let you hit in.
My name is Darwin Caffrey. I also keep a license in Massachusetts, New Hampshire, Rhode Island. My license number 1706702. I'm on John and Tony Libman's team. Go ahead, John. Ask some questions.
Yep. So just want to say these guys have been doing a great work in the community, helping a lot of homeowners and new future homeowners. So which is why I have them with me on the call today. We're basically going to touch base a little bit because of new federal laws concerning relief programs due to coronavirus, and kind of like just briefly overview about options for current homeowners and also the impact on folks looking to buy a home at the moment. So as of last Thursday, Massachusetts House has passed a bill prohibiting foreclosures and evictions due to the coronavirus. So basically what that means is that for homeowners who are experiencing trouble or difficulty, I should say, because of the coronavirus, there are some options to help them keep their home. So a couple of options are the foreclosure moratorium and the forbearance, the right of forbearance for homeowners. If you guys can explain a little bit what that actually means, a foreclosure moratorium.
I mean, I think this question's been coming up a lot with actually many questions the last couple of weeks. You know, and one of the biggest things is that, you know, all these loans that are done are eventually in the hands of a servicer that is servicing this loan. And, you know, with all the talk of, you know, any kind of forbearance or deferment or anything like that, I think the biggest thing is making sure that you talk directly to that servicer. You know, if you're getting serviced by this bank, but you call this one for information, you know, well, everyone may be treating this differently. So I think the biggest thing is getting documentation as well to back this up. I mean, the last thing we want is someone to think that they have permission to do it, or they have the proper paper skipping, and they got kicked out, and they start skipping mortgage payments, or they think they are skipping mortgage payments or pushing them off when they didn't read the fine print. That would be an awful scenario if all of a sudden now we have late mortgage payments on someone's credit report. It could affect any kind of refinance or purchase in the future, or infect their credit score. So just make sure you get some sort of written documentation that can back this up, that you can stand on, you know, if you are considering this move.
Yeah, so definitely big tip there. You know, making sure that you speak to your loan servicer to get information about what options are available to you, and making sure that you actually get it in writing when you decide which option that you're going for. Great tip there. Now, so pretty much the right of forbearance. What does that actually mean? You know, that I can request for forbearance.
No, I think the difficulty with that is it may be treated differently per servicer. And this is why it's difficult about really giving that right advice. And this is why it's so important to really contact that direct servicer that is doing it. Think of it like a student loan, right? If a student loan is deferred, right? Yep. You're pushing out payments for X time frame before they kick back in. Now, depending on how this particular deferment is set up, I'm not sure if each individual servicer may treat it differently. I've heard a couple different options people asking them about. I heard different terms, but this is why it's so important to talk to them directly. But in a way, the goal is to allow you to get past a period of time without having to make that payment. It doesn't mean that payment's not still due, But that's really what it is to kind of bypass this little bit of time right now that we're all dealing with.
Yeah, which is great. So definitely there are some options available to you if you're a homeowner to help you during this period of crisis. And as you said, best way to find out which option is available is to make sure that you call your loan servicers. Questions that I've seen out there, and I don't know if you've seen these as well, is are there any upfront fees for requesting that? Do you know?
And I was gonna say, I know I'm kind of like beating the dead horse situation, but this may be case by case. I'm not sure. I don't want to give the wrong advice on that and say that there is a fee or there is not a fee, because it may be treated per company. I'm not sure if it's, and I wouldn't even have any idea of what that cost may be. I don't even know if it's blended into a mortgage payment. I'm not really sure, and that's why it is so important to get some written information directly from your servicer that you can stand on, years moving forward if anything ever comes up on it.
Yeah, definitely. And for homeowners who are actually looking to refi, how is this present situation affecting that process?
So what's interesting about that is the March really saw us go back and forth on this refinance market. We had this form of like a little boom of a refinance. I felt, the first week of March, it really, we almost got a bottleneck in our industry. And then as this has continued to happen in our world really right now, the secondary market's kind of having a different appetite for a lot of loans, and it's really affecting the type of underwriting we can do, the style. We're getting a little bit tighter on all the guidelines because we are having difficulty with everything that's happening. Refinances overall, I've heard most companies have been, I'm sure there's still companies doing the refinances. We even do the refinances, but you're not seeing the rates as attractive sometimes against the purchase market right now. That's what we've kind of been seeing out there. But every bank, every lender is probably going to handle this differently. But that's what we are seeing. So you're trying to see almost like a natural slowdown on the refinances right now. We may see the ability to really tackle those lower interest rates, as the months go on, where people are getting those now really on the purchase side of things rather than the refinance. You still have the ability to refinance. I think you're starting to see those slow down a little bit.
I see.
But to piggyback though on something else though is, remember refinancing is at per case can be a great opportunity to save on a monthly basis. It can be a great opportunity to potentially get rid of mortgage insurance. It could be a great opportunity to potentially lower your rate. Even extend time frame outs. If you have 15 years left, to extend out 30 years. Where these are different avenues that you can have some comfort level, especially if you've taken a hit, personally with any kind of furloughed or layoffs or anything like that, but we need to make sure, and we'll kind of elaborate a little bit more on this call in regards to the verifications of employment, so once you're back to work, maybe that is something that you consider to do, when those start to open up, potentially this could be May or June, I'm not sure.
I see. Great. And that's like question that has been burning on probably a lot of folks' mind as like, should we be expecting a surge in foreclosures like we saw back in 2008?
It's a loaded question. That's a very loaded question, right? There are a lot of, it's really tough to answer that question because I think it's opinion, right? It's opinion based. But I think the biggest thing is the loans that we did write over the last couple of years that potentially someone may have a foreclosure on, we had a different underwriting style today than we did in 2008, right? The underwriting that we were doing back then was a lot of subprime loans, a lot of loans where potentially that same person that was qualifying in 2008 would not have qualified today in this market. More full documentation today, more proving the income, history of employment. The credit restrictions were a little bit tighter. Every loan that was been written over the last couple of years, it's much different than 12 years ago. So I think when there is the layoffs, you're not seeing these adjustable rate mortgages hit like they did 10 years ago, 10, 12 years ago. So I think that's probably one of the biggest differences I see where the banking industry set it up differently, right? I think that's what's kind of nice about now, in my opinion, compared to back then, is I think the people that are in the homes were more qualified at the time and were properly qualified to buy that home. And there's more 30-year, more of your fixed loans for a period of time rather than the adjustables, I believe, in the market, which obviously helps because if someone loses their job and all of a sudden their rate adjusts up to a higher number, now we have even more problems.
Yep, exactly. Yeah. So switching from current homeowners to future homeowners, how is that, impacting them? When we're seeing numbers of layoffs or even temporary layoffs and the furloughs, when we're looking at the numbers getting higher and higher, how's that impacting future homeowners?
I think it, depending on the person, I think you might have people that were ready to buy or are going to be a buyer. Maybe they've been saving up for their down payment or something like that, right? And potentially they've been chewing into that savings, maybe to just get by at this point, with a 2-month layoff. And the government stepped up and obviously has issued some checks as well, but they might be chewing into a little bit of their savings, and I think that probably will affect some of their down payment ability in the future with future loans. Doesn't mean they wouldn't be able to qualify, but that might have an effect on it. But I also think you're seeing a lot of people potentially realizing the value of home ownership. There might be there's a lot of value in the home ownership, when you're cooped up in a place where it's potentially not yours. I think there's a big difference there. As a buyer, I think I would be more motivated than ever to find a home going through this experience. Yep,
definitely. And regulations changing a little bit. I know I've read recently that Fannie Mae, Freddie Mac have relaxed their standards in terms of when it comes to employment, VOE, employment verification, and appraisals. Anything that you can say about that, how that is affecting folks with the pre-approval process or even the purchase, I should say?
Yeah, so I mean, one of the things we're seeing, with trying to limit the face-to-face, I think we're seeing more right now of the waivers happening on the appraisals. So it was kind of common to, if you see someone putting 20% down or more in a great area, strong borrower with conventional financing, we were actually seeing waivers in the automated systems, which would then the borrower has the right to either waive the appraisal or still get one, right? And I actually just recently, I feel like I'm seeing them a little bit more and more. So I'm not sure if, that might have mean that they've kind of lightened up on the appraisal waivers. So maybe they're allowing more through the system. I'm not sure. I felt that I'm seeing more on my end. It doesn't mean that they actually have. But I think with that happening, it's allowing a little bit less face-to-face, especially with the appraiser, because we're not requiring the appraisal on our end, Okay. And then you mentioned verifications of employment. That's kind of a hot topic really over the last couple of weeks, because we've had a lot of people that are in transactions that are unfortunately getting furloughed or laid off. And we really need to verify that they are working or they're back to work, in order to close on that loan. We need to make sure that they are employed in order to pay that mortgage, right? So that's probably been the big conversation about extending closing dates out, potentially rate lock extensions, things like that, to make sure that we can weather the storm.
Yeah. I mean, that's great. Lots of information. Just as we're kind of like closing this session, I don't know if Darwin, you want to give a few tips to folks who are listening.
Just going off what John said, I think overall you should probably make sure that you don't assume you automatically don't have to pay your mortgage or you're automatically in this program. Be in contact with the servicer, know exactly what you're getting yourself into too. Make sure you have documentation, like John mentioned. Just down the road, something comes up, you at least you have it in writing that, hey, whoa, this, this happened. You said I could do this. Always make sure you have, something to back yourself up. That's the most important thing.
Yeah, hey, thank you.
And I was just saying, we always recommend, we're always a voice. You can always contact someone like ourselves. Joe, you can contact you. You use your spheres. So a couple of the things that we were just kind of referencing, Darwin was bringing it up, is just making sure you get any kind of that documentation. Anything that you're remotely thinking about doing with your servicer in regards to your payment, please contact them. Get something in writing. Make sure you can stand on it in the future if anything ever comes up. I was saying that a lot of these people that we're all available for questions. So if you are someone that doesn't currently own, or anything like that, or has any interest in home ownership, we're happy to answer questions. this is a great time right now to, buckle down your finances. This is a great time to kind of come up with a game plan, maybe some comfort levels, budgeting, different things like this, to prep for that home ownership, and maybe having these kind of conversations are really good times to prep for it. There will be a time that we're all able to go back outside, and during that time, you'll be really ready to go. And I think it's connecting with people like ourselves, to really get that information.
Yeah, pretty much. Yeah. Just putting the message out there. Yes, we are all safe at home and working from home, and we're still available to answer questions and deliver the same quality of service that we have delivered before in the past. So.
And I got off what you said. It's talk to a professional, right? Somebody's going to know the answer. Don't guess. Somebody in the industry will know the answer for you.
Definitely. All right. Thank you for being with us. Thank you for watching, and feel free to reach out should you have any questions.
All right. Contact number is 508-212-5616 is my direct cell. Again, the license number is 14174, and I work for Residential Mortgage Services, and we're licensed in New Hampshire. I'm licensed in New Hampshire, Mass, Rhode Island.
Yep. My contact is 774-826-7008. I'm also licensed in Massachusetts, New Hampshire, Rhode Island. My license number 1706702. Awesome.
All right. Thanks, guys.
All right.